first of all, Stephanie, we chatted earlier, and let's start with you. You said something that, I think is a little extreme, but and that is that, S&P, this 125-year-old institution that you represent, is one of the most conservative organizations in the world, which may or may not be true, but I can think of some others that would be even more so. But, why does that matter? And what is it? Tell me a little bit about when you think about this vision, right? We're going to have a little bit of a conversation, by the way, not just about tokenization, RWA, but also AI, which in some respects is probably, in this particular instance, the more powerful force for disintermediation than anything. And when we do that, what's the perspective that this conservative 125-year-old institution brings to the idea of our asset management world being, both tokenized but also disrupted and disintermediated by AI?
Yes, so you're correct in that S&P Dow Jones Indices have been providing transparent, rules-based indices for 125 years. And with that comes an element of trust. The market trusts us, and we really believe in market integrity. And it is vital that new means of distribution maintain that market integrity. Now, I mentioned trust a minute ago, and I firmly believe that actually we aren't in a period of disintermediation of asset management, but collaboration. And one of the reasons for that is purely trust.
Yes, sir.
I think there are three key ways you can gain market trust. One being a strong regulatory framework. We're not quite there yet. Secondly, it's taken over 10 years for financial services to regain market trust after the GFC. And many institutional investors need to or want to invest with established intermediaries who can then safeguard their assets and maintain the fiduciary duty which they are obligated to do. So I think you're going to see trust in those traditional intermediaries. And then thirdly, I think to some extent we're taking for granted the educational aspect. Now, again, the trust aspect comes in that in order to gain the AUM, which we all hope we will see in the future, we need to educate the market. And I think those established intermediaries are going to be incredibly useful in helping us educate the market so that we can see the tipping point of AUM move into this area.
Okay, Melody, let's just start with in some respects, the use case that S&P itself represents, right? So the indices business is one of your institution establishing, baskets of assets that then get defined by what your experts recognize as representing the claim as to its value, and then is involved actively in the reweighting and structuring and so forth of those assets. That's the sort of thing that, in our minds now where we know AI can do, we think, why wouldn't you just and I could find my own agent to go off and define my own index and have it actually reweight my portfolio and then actually act upon that and trade the assets according to that index and have it all done by AI.
Yeah.
And so, Stephanie talks about trust. How do you see us resolving that? Can we work in a way where that machine now I can trust to do all of that?
Yeah. I think it's a very interesting topic on disintermediating, whether it's or we're disintermediating in the institutions, right, in between in the issuer to the client or the customer to the business. I think that's including payments, right, including what we're saying the big funds and also where they can sell the funds to. And another one I think we talked a lot about behind the stage is are we all going to lose our job because AI can do a better job? And then now AI has if we put everything on chain, AI probably has better data and more real-time data. And they can, if AI gets a wallet, and why don't we just let them trade and improve the result? And I think it also we come from a bit more earlier stage of venture investment, more than like many probably managers here that is doing a much more public markets. We just spent like 2 weeks in California, right, speaking to a lot of AI companies. I have to say, everybody in any room is worried about their job, that the AI is going to disintermediate many of the businesses. I do think one of the biggest applications for blockchain crypto is financial, and one of the biggest use case for AI is going to be financial. So I definitely expect there will be a lot of jobs that will be replaced by AI, but I do think human is very important in the loop. I just like some examples, right? Like you said, trust. I think AI is not good enough yet, right, to execute, or it's not good enough for us to give money to the AI and then just forget about it. It's not theoretical, like we've tried it, because one of the most interesting, I do see DeFi is one of the testbed and experimental field, right, for finance. A lot of things you cannot do in traditional regulated financial industry, we try it all, right, in DeFi, because like perps, right, like the 100 times leverage, like the hyperliquid type of 11 people and makes a $1.2 billion, type of business. We try them all. One thing we've tried from maybe even from 12 months ago, I know the crypto industry has been trying really hard to assign assets to agents to make them trade, to see whether they can consistently generate return. The answer is it's getting really good. It's getting really good.
But it's also just like, this is people's portfolios, right? This is money is a really good test case of what you can or cannot trust, right? I asked an AI the other day to give me an estimate of how much time it would take me to say some words on this stage, and it actually miscounted how many words I told it. It told me quite confidently that it was 500 words, or it was actually 800, right? So you've got, how on earth would I trust this particular agent to do something if it can't even count the words, right?
Yeah, so, I think it's a lot of design. It's like design the right algo for the right use case. It's not going to be a generic. You ask LLM to buy this thing and give this to me. It's going to be using crypto incentive, right, to create certain evaluation and also guardrail, right, to allow the model to behave the way you want it to. And I think actually using crypto incorporated in this AI marketplace. I mean, I have specific examples. I don't know if you want to go into that, but that can definitely improve the trust and then also the accuracy.
Okay. Why don't we come back to you in a moment? Actually, you want to also bring regulation into this, but I think like if we can get you here, Martin, to talk about this word of trust, right? You've been building in the crypto and blockchain space for a while. You've thought hard about how this all intersects with TradFi. And clearly, this question of trust can be framed in all sorts of ways. Can we get to the point where we don't need to trust the institution or the person or the authority or whomever, because we have a protocol that is going to always execute in a safe way? Is that where trust is going, or we're going to always have to use these human-in-the-loop type of structures?
I think that's exactly why we are here. So we are trying to build a new, better financial system running on blockchain rails, and actually removing trust or the need to trust someone from the system is basically the foundation for disintermediating the financial system. So for me, really removing intermediaries and make the system more efficient is not a question of AI or not. That will happen anyway. But at the end, you also need to trust an AI. But really building trustless structures, that is actually only something you can do with permissionless decentralized blockchain systems. So if you look back, a couple of 100 years, the Italians have invented the financial system as we know that. You had people with money, people without money, you wanted to get money, and they didn't really trust each other and created more and more intermediaries basically to create trust in the system, and as the financial system in the last couple of 100 years was evolving, we actually added more and more trusted intermediaries to actually scale the system and make it more efficient. And now, actually, the first time in history with blockchain, we are actually able to remove those intermediaries. We are just created for the purpose you cannot actually trust the counterparty. And with blockchain, actually, you have a system which is trustless. You do not need to trust the system itself. The system itself is creating rules, we call it smart contracts, actually replacing or have the ability to replace those intermediaries, and actually where you can interact with someone else without actually you need to trust them. Because hey, a smart contract in a very simple version is if you tokenize something, I issue a token, and I can buy the token for a stablecoin, and the smart contract makes sure that the token and a stablecoin is exchanged with each other without an intermediary. And that is one of these simple use cases, and you can of course expand that, where basically protocols running on decentralized networks replacing intermediaries as we know it, and that has just started, I think. And coming back to AI, I believe that is actually really creating the framework to make AI more efficient and to deploy AI independently of someone who is owning the AI. So I think currently, if you talk about an agent, robot investment advice or whatever, you actually need to trust the company who is running the AI, and also that the AI is doing its job. In the future, basically, you most likely can deploy as many AIs as you want, let them compete with each other, and have full transparency on the blockchain what AI model is performing better than another, for example, different use cases. If it is risk analysis, portfolio management whatsoever, it's most likely a multitude of use cases where AIs are replacing humans or institutions as we know it, where blockchain, I believe, kind of starting to disintermediate really functions in the financial value chain.
So I want to pick up on something. I love the reference to the Italian system that emerged. And it got me thinking, as you were saying that, about something I mentioned on stage a little while ago, which was the 17-year anniversary of the collapse of Lehman Brothers happening just yesterday, right? And that was a situation of a trusted institution, an important trusted intermediary in the system, collapsing. And to those of us who saw that from a crypto's perspective, which I later did, I didn't at the time, that's the problem. We have to remove that dependence and create something that's going to work all the time without having to, it's a trustless model, right? However, the response from regulators was actually the exact opposite, because, in an understandable way, right? It was like, this is terrible. Look, we have to put more institutional control over this, more centralized authority, more control, right? And I think you've got that tension happening, interestingly, from a completely different perspectives on how to solve the problem. So with that in mind, why don't we talk about the regulatory scenario, right? Basically there's no, for institutions that you deal directly with, they're just simply not allowed to do the kinds of things that we're talking about right now, right? But is there a way in which we can frame this differently so that some of these functions, be they blockchain related or AI, can be regulatory compliant without having the human in the loop and the authority? Or is this going to always have this player in the middle?
I'm going to disclaim myself. I'm not a regulatory expert by any means. But I do think that you do need a registered issuer to issue the fund or whatever. And as a result of the regulation, and actually the complexity of the regulation, you have intermediaries who have deep expertise and deep knowledge in reading and understanding the regulation and creating products which satisfy those requirements. Now, the reason I don't think you can necessarily have a smart contract or an AI do that is because they read things as black and white. They don't necessarily read the context. And regulation typically is quite broad because it's trying to encapsulate potential future issues or potential challenges which may come up. And so to some extent, I think you do need those intermediaries with those deep expertise to...
Can it be more like a break the glass kind of moment though, right? Like you let the machine work up until such a point, then when all that ambiguity suddenly emerges, that's when the human steps in.
But then that's not disintermediation, that's collaboration.
Yeah, maybe, yeah.
And evolution of your roles.
Right. Yeah.
And so I actually think that's where we're moving towards, which is evolution and collaboration. rather than disintermediation.
Okay. But Melody, you're there, as you said, you're out in the West Coast and you're dealing with builders who are just like, I think the incredible moment that we're in right now, and actually it's been in it for crypto, but obviously AI is accelerating this, is just like, I can just build something, right? There's not even necessarily it is sort of the break fast and move things mindset, but it's also just that the technology is moving so fast that these regulatory and these constraints, these cultural constraints, these social constraints are just being ignored. Yeah. And so is there a point in which we just build these things anyway? And then how do we learn from
I think when we mention, we started investing in the space in 2017. I think the one example back then I always give people is the permission versus permissionless. It's you have to ask if you want to use anything in AWS. You probably have to apply for the API, being a developer, right? And then they allow you to use their software even. If you want to use the Google Cloud, you even have to sign up as a person. But here, like in blockchain, anybody can openly access anything, right? So I think that's really the beauty of it. We can really bring the innovation, on DeFi first and test it out, whether there is product market fit, whether liquidity emerges, right? Whether user want to use it, right? If like AI is able to take the on-chain data and do a better job, right, investing, maybe we can then introduce it back to the traditional market. So I think for me, also the disintermediary, also to me, it's like being permissionless. Like, how do I create that assets? How do I create that strategy? And any small guys, maybe they have some edge. They can compete with, one of the big funds. We don't know. So I think for me, like we are investing into the cutting edge, right, of the disruptors or the out-of-box thinkers. Like I think they are going to emerge from DeFi, and they are probably going to create a much more creative assets or strategies, right? Right, on some of the more traditional managers. So maybe it's a way for me to say it's this intermediate innovation, right? It's for us to open up a lot more interesting ideas.
It's interesting hearing Carlos make his case yesterday. I'm not going to take sides in that debate, but like that once this KYC AML model was in there, like the regulation was in there, the control, which based, by the way, is a permissioning system, right? You add permissions to what was a permissionless system, then then adoption just went through the roof, right? So that there's this idea that in fact, if we just like break down the permissionlessness and add trust back into it, you ironically may actually boost this even more, right?
I disagree.
Well, good. I'd like to hear that.
First of all, I think innovation is happening like this. You had first cars and second traffic lights. That is, I think, a pattern. So that has nothing to do with crypto or with blockchain. And the second thing, KYC AML is a perfect example. So regulators don't understand the technology yet. The policy is being made for the pre-blockchain era, and actually, we are right now I think, at the time where regulators starting to understand that actually blockchain is the use case. And to give you an example, KYC AML, if you basically remove the permissioning as a gatekeeper, or the intermediaries basically saying, yes, you can do it, you can invest, you can trade that asset, etc. If you remove them and keep it separate and make basically create an on-chain identity. So if you say, hey, if you are kind of, get your passport, and that passport is basically providing you already with a digital identity, then actually no one can stop you anymore from buying a specific product, do something that specific product, when actually a permissionless system is able to prove based on the digital identity that you have the right age, that you come from the right jurisdiction, that you need to be a professional investor, have the right knowledge, that you may have enough money to actually trade it, etc. And even the asset manager isn't capable to kind of block you anymore, So, and then I think that will be the future, where we say, hey, it's actually at the end a much more inclusive and democratized system to what we're having today with less intermediaries.
Alrighty, listen, we've got 30 seconds left, and so I think we have to wrap it up very quickly, but maybe, Stephanie, a quick response to that in some respects. I mean, do you think that we still have to have these parties proving identities in the system?
In the KYC?
KYC in particular, yeah.
Yes.
Okay.
Yeah.
On an ongoing basis, yeah, as opposed to your model, which is like this. It's just like you take this passport and you run with it. Okay, great. Thank you very much for your time. Appreciate it very much, everyone. Thank you.
Thank you.
Thank you.